why do you think the Bitcoin versus gold debate is so polarizing?
It's polarizing. I know from my own personal experience when we kind of switched from following gold in 2021 to starting to cover Bitcoin, it was like Bob Dylan suddenly going electric, right? The traditionalists in the crowd and those folks who are into gold thought it was an outrage and a betrayal. And so there's a lot of that in this debate. People have a huge affinity for gold. It's certainly got a long track record. Frank Giustra does a good job in talking about the track record of gold, that he says it's universality, which is very appealing. It's accepted all over the world. And I think he wants to enter this debate almost, as he says, I'm willing to switch camps. I'm willing to go long Bitcoin. Convince me. Tell me why I should go long Bitcoin. So he's really waving the red flag to the ultimate Bitcoin bull, Michael Saylor. For his Michael Saylor, I think was going to play a bit of a rope-a-dope tactic on this. He's going to let Frank Giustra kind of punch himself out initially, and then come back later with some more defining arguments that will kind of, I think, put Frank on the defensive. A couple of things that Frank said leading up to this debate that I find curious. He said, quote, I need to have Michael Saylor clarify some things he has said, alluding to what he believes that Saylor is kind of hiding something. He's not really fully disclosing everything that he should be. And Frank is suggesting that Michael's gone on mostly friendly shows. He hasn't had real questioning from a real critic yet. So he's positioning himself as somebody who has a smoking gun almost. And so that's interesting, Daniela. I'm wondering if he does have a smoking gun, if there are some glaring holes in the Michael Saylor pitch for Bitcoin that we're not aware of, but maybe Frank's coming into this thing with a surprise tactic, a surprise weapon, Daniela. Well, I think with gold, the greatest attack, as Saylor would point out time and time again, is that it's not technology. And we live in a century that's now being completely dominated by technology. And what made Bitcoin great was all of the technology that we've seen for decades developing in the United States finally caught up to money. So money was the last industry, the last entity in the economy that hadn't been completely transformed by software, by technology. It has impacted every other industry in the world. Most companies, and at the end of the day, are software companies. We see this in the auto industry where they can't deliver cars now because they're out of microchips, right? So that's software, that's computer technology. It finally caught up to money itself in 2009 with Bitcoin, and now it's simply taken off from there. Frank, I know, has said that, well, Bitcoin's only 12 years old and we don't have enough of a track record, but that's a bit of a misnomer because Bitcoin builds on 25 years of technology development in the space. The so-called cypherpunks have been working on this for 25 years. Even Henry Ford, speaking of the car industry, talked about having an electricity as money. And he made those comments, 100 years ago. So this is not really as new as some think it is. It's the culmination of many decades of work. And then it finally took off in 2009. And like any network technology, it has the potential to go exponential. And that's we're at now, that hockey stick moment where ubiquity kicks in. So I think that Michael Saylor will drive home the point that this is technology and how technology is the centerpiece of the global economy and how technology is now transforming money itself and does a better job than gold in areas like portability, in sending money or sending value on the internet. Obviously, Bitcoin would be better than gold for that purpose. The transaction costs actually in Bitcoin are incredibly cheaper than gold in moving size. If you use move $1 billion worth of gold, Daniela, it's going to cost you at a minimum $30,000, $40,000 to make a move like that from one bank to another. We've seen $1 billion moves in Bitcoin routinely now costing $5. So that's an incredible cost advantage. So the technology aspect to it, I think, is really going to be a tough nut for Frank to overcome because it's such an obvious transformative reality that I think that's going to be a tough nut to crack, as I've said.
Yes, Bitcoin, beats gold, but the issue of volatility and also the issue of regulation will come up.
Yeah, those are two issues that will definitely come up, volatility and regulation. On the volatility issue, when you have an asset that's emerging to compete with gold and it's compounding at 200% a year for more than 10 years, that's the volatility. I'll take that volatility every single day. You can't have an asset move up in the millions of percentage points without volatility. And also with Bitcoin, remember something, this is very important. I'll speak as a Bitcoiner. With fiat money, which we also have to include in this debate to some degree, with fiat money, you've got no volatility, but you're guaranteed to lose purchasing power. That's a guarantee. With Bitcoin, you have some volatility, but you're guaranteed to increase your purchasing power. So what would you rather have? Some volatility and increased purchasing power, or no volatility and a guaranteed loss of purchasing power? With gold, as Paul Tudor Jones has said, he owns gold, he owns Bitcoin, but he considers Bitcoin to be the fastest horse in the race because it's competing with gold as a store of value. One of the things that Frank has said recently that I would think is a little off the mark, he says there's not really any institutional adoption, but that's not true. We're seeing institutions all over the world, insurance companies, endowments, hedge funds, sovereign wealth funds, everything up to the level of the central banks have been nibbling or outright buying Bitcoin. So we do have institutional adoption. We've got Fidelity, BlackRock, the hugest money managers in the world now buying Bitcoin or about to offer Bitcoin ETFs. So this is the institutional adoption is coming, and it is a global asset like gold. It is available universally, and it's being picked up in those countries that are being victimized by the U.S. dollar and the sanctions that come with the U.S. dollar. Those and the hyperinflation that we see in a lot of these countries, they are just rushing into Bitcoin, and it's a lifesaver. So on that front, I think he's a little behind the curve. There is a lot of institutions. On the regulatory front, we're getting comments out of Washington all the time where there's a flip. They're saying, actually, we're less concerned about regulating and we're more concerned about being left behind as these other countries start buying Bitcoin and mining Bitcoin. So America is about to enter a moment like the Sputnik moment where we entered the space race. America's got to enter the Bitcoin race because these other countries that are hoarding Bitcoin and mining Bitcoin are set to have the hardest currency in the world as their reserve currency, and America could be left behind, number one. Number two, it's one thing to pass regulations, but it's quite something different to enforce the regulation. What we've seen in countries that have already tried to pass regulations or have passed anti-Bitcoin regulations is that they have found it impossible to enforce the regulations. And that makes sense because it's encrypted. There's no way to crack the encryption. It's completely distributed. It's repeated on thousands of nodes globally. And there's nothing you can do to regulate Bitcoin.
Are you hearing that out of China?
China hasn't stopped Bitcoin at all. Or India, they've banned Bitcoin many times, but usage goes up. Typically, in a country that bans Bitcoin, the usage goes up, and so it's not really. We have not seen any ability of any regulatory authority to stop Bitcoin. They've only been able to highlight the need for Bitcoin and show that adoption rates are going up. You also have the issue of geopolitical or geographic arbitrage, where if one country is going to try to clamp down on Bitcoin in a harsh way, then the industry moves to another country that then they're in a position to have a dominant position in a Bitcoin